What is up, YouTube? Welcome back to Stacks by the Numbers, and it's Friday. I know I'm coming to you about an hour after market close here, but someone asked me to go over this company here. Was the next name on the board. This actually happens to be another Canadian company. I know we looked at a hydrograph recently out of Canada as well, but this is Precision Drilling Corporation, ticker symbol PDS, listed here on the New York Stock Exchange. So the stock closed a touch below $72 here at $71.90, up about a point, 1.33% here on the day. And the stock, as you see, has gotten really beaten up over the years here coming into these lockdowns and has since really been climbing nicely. They've been reducing their debt by hundreds of millions, and they're talking about future share repurchase programs to benefit shareholders, obviously. And in my opinion, it does seem very attractive here in some of the numbers. So there's a lot of positive news recently. A lot of the price targets are significantly higher than around $72 where we're currently trading. You can see, again, we had this big run. Now we're kind of in this little triangle channeling pattern here. And this also looks like potential like all-time resistance trend lines. The company did go through a handful of splits going all the way back from the 90s here, as you see, but going from this like all-time top here on the chart, looks like around the third week of May right there, 2005, connecting down to those tops right there, looks like about the first week of July 2014, and I just kind of cut that down and drew that down across, and you can see that we're actually approaching that trend line, and we can potentially meet up with it sometime soon. That would be this top trend line here, which, as you see, if we continue moving forward, and we're looking at, well, this is only about 5-6 weeks, but if we happen to immediately move there, you can see on the right side of the screen, we're looking at potentially about $84 a share. This also was the top, from the top of the range here, you can see from the high of November 11th, 22, connecting to those highs right there, January 18, 22, coming, 2023, just cutting down across, and you can see we may potentially run into some resistance, maybe right around there, looking like maybe about 79 and a quarter. So in my eyes, we definitely can continue to climb here. If we look at last earnings, we can see they actually missed on the EPS side by about 11%, but the revenue has been pretty stable and growing nicely, up to 389.6 million. Estimates were 387.9. Before that was a really nice beat on the top and bottom line. This was actually the most recent time that they missed on revenue. Every quarter before and after, looking at about the last 7 or 8 quarters, they've been beating on revenue estimates. So the company seems to be pretty strong. We have positive cash flow. And again, they're trying to bring down their debt, and they're talking about a future share repurchase program. So we could potentially have something that over time can easily get us back. Again, this is conservatively, in my opinion, even back to these 80s, because a lot of these price targets are much higher. So in my eyes, based on what I'm reading as well, I actually agree with most of these analysts, and I think we can easily see maybe $90 to $100 a share over time. And of course, that's going to equate to, potentially 50+% return here from these current levels. But we have a market cap just over $1 billion here at 1.04 billion. Look at this PE trading at about 6.25 times earnings. The beta essentially in line with the market. Again, the beta is the overall volatility of a stock in relation to the overall volatility of the market. So 1.0 basically in line with the volatility of the market. So slightly more volatile, but nothing too crazy. EPS, as you see, kind of mixed, but we are generally climbing over the last several quarters. We're expecting a dip down here for Q2 of 24, but we have 2 beats, 2 misses for the last 4 quarters. And look at that annual growth here. This is what I like about this stock, because obviously they took a hit here in 2020. We can see revenue dip down to sub $750 million. Then we jump up to 780 million, and you can see the losses actually widen right there, going from net margin minus 12.8 down to about minus 18%. Then we almost have an immediate reversal here, back up to 1.19 billion, right where we were at 2019 before we had the big drop down in 2020. And of course, net margin minus 2.1%, almost back in line to where it was in 2019. And now we roll out and we finish out 2023, and we almost hit that 1.5 billion mark for annual revenue. Net income positive now, about 218.25 million. Net margin percentage touching almost 15% for the year. And quarterly as well, we can see, looks like Q1 seems to be one of their better quarters. Technically, we're slightly down on the revenue by, it looks like maybe about 20 million in change year over year. And our profitability took a hit as well, as we saw last quarter here, missing on those estimates. But overall, in my opinion, I do like it. And the fact that, again, they're pushing towards this free positive cash flow, recently got a lot of upgrades, and they're making it their focus to be more profitable and try to take care of shareholders. So they know that they have to try to allocate their funds, their liquidity to bringing down that debt, which was pretty high, but is significantly dropping year over year. I believe they were talking about roughly 500 million in debt reduction between like 2022 and 2025. We could pull up the article, but obviously we all know what that translates to. That all of that translates to a stronger stock and a higher share price. So they do seem to be trying to take care of shareholders here. And even though, again, the stock has been pretty up and down over time, it does seem to be looking much, much more stable and much better, in my opinion, when compared over the last previous years. But we can see for 2024, again, remember this is an election year. So any potential winner of any election, we may not obviously have an immediate reaction to some stocks we may be looking at if we're playing them based off of like quote unquote like any type of policy implementations that we might see from new presidents or prime ministers, whatever. But again, right now, in my opinion, just the fact that they're able to maintain this revenue here, 146 billion for 2024, in my eyes, seems like a decent sign. And then, of course, if for any reason the landscape changes here in the oil drilling sector, then, of course, in Canada, again, we can look specifically in 2025. But, chances are right now in the moment, it seems like this company is on the up and up. And we can see, look at the losses here in 2020, going into 2021, losing over $11 a share, making a nice chunk up recovery, even though they missed, of course. I mean, estimates jumped all the way from, losing $11 a share. Estimates were 16 cents a share. So technically, the company did miss by a mile, as you see, over 1,200% miss. But, going from $11 a share loss up to less than losing $2 a share, again, technically we didn't meet, but pretty impressive move. And then you can see the real explosion, the later acceleration took place coming into 2023, and now all of a sudden the company is head and shoulders above the estimates. For the year we were expecting $9.55 a share. Company ends up posting almost $14 a share on the profitability side. So even now we're expecting a big drop here from 23 to 24, but we're still up here north of 6.25 a share, which of course is far from where we've come from. And yeah, we're 2 of the 4 on the EPS for the last 4 quarters. And yeah, 3 of the 4 beats for the last year. And again, that's that slight roughly 3% miss on revenue here, but 3 of 4 beats on revenue in the last 4 quarters. And look annually as well, right? Look at this debt here. The debt back in 2019 was higher than the current market cap of the company, even after having this climb over the last year or two. Right? 1.15 billion. Look at this debt. But look at the way they begin to chunk it down even throughout and after 2020, which is, in my opinion, is what is really impressive here about this situation. Because I understand if we look at debt and we look at some of the margins and, operating income, may have gone down. I know they were citing their net margin dropped a little bit, their profitability for last quarter. So, a lot of people are kind of, you could make the argument that it's a little mixed potentially, and we could of course go down before we go up. Totally understandable, but I'm again just trying to look at the overall broader longer term view here. And in my opinion, if they are able to continue to reduce this debt down by hundreds of millions year over year, while at the same time repurchasing shares with the positive cash flow that they now have, in my opinion, that they're probably not looking at this as a $70 stock. They're probably looking at this as a $170 stock, in my opinion. But we can see again, debt 1.15 billion going into 2020, 1.02, 921, 850, sub 750. And even quarterly, we can see just consistent drops down. 908, 779, 761.8, 748.6. 748.78. Okay, so the debt slightly ticked up here this quarter for Q1 of 24. However, again, the company said that they met their goals for debt reduction for 2023. And again, they're looking for about 150 to 200 million plus debt reduction for 2024, along with share buyback. So probably over the next quarter or two, we can potentially see this number drop into the low 600 millions. We technically do have assets outweighing liabilities, both the short term and the long term. Okay, we switch over here to the income statement, and we can see recently, the last couple of quarters, the cost of goods sold jumped up from 250, 260, back up to about 300, but we can see Q4, Q1, even last year, costs were up here at 300 plus million. Gross profit, yeah, bouncing around as of last quarter, 81 and a quarter, and minus this time last year when it got above 100 million for that quarter. This is technically the second highest it's been going back the last 6 or 7 quarters. So that's a pretty decent sign in my eyes. Operating income sitting here a touch below 48 million, technically slightly higher. We were above 50 and at 97, but before that we were in the 30s and the teens. So, technically, not the highest it's been, but not the lowest it's been as well. Switch over here to the balance sheet, and we can see that we recently hit 2.5 billion on the asset side, pulled back to 2.2. So yeah, that was about an even cut, as you see. Dropped the assets by about 0.3 billion, and we dropped the liabilities by exactly 0.3 billion for the most part. Assets minus liabilities yields total equity, and we can see the equity has been consistently climbing here from the high 800, low 900 millions, almost up to a billion, getting up to 1.02, 119, and now as of last quarter, 1.21 billion. That translates to higher book value per share. Book value per share is now higher than the current market price of this stock here. Again, stock trading at 71.90, current book value 83.38. Even as of last quarter, almost 83. Couple of quarters before that, basically sitting a touch below 75. Stock still sitting sub 72. And again here, 83.38, if you recall, that top trend line we looked at in the beginning was about the high 83s potentially over the next like 6 to 8 weeks if it takes and slowly climbs up to that line. We're looking at about, between like 83 and a half, potentially $84 a share. And we can see that's basically kind of in the range of where the book value per share is. So very, very interesting to see what's going to take place here with PDS over about the next 2 to 3 months. In my eyes, that's what I'm looking for. But I think it could. I think it could hit that 80 plus mark. And again, even that top trend line I think we looked at was like almost 79, I think, if memory serves correct. So even conservatively, if we, stay on this path and just continue to slowly climb, this might be good for a quick like 10, 12% gain here for all you traders out there. If you're not looking to buy and hold this for the next 3 years or something, right? But PE over here is 6.25. We can see we were a little bit lower. We did hit double digits a couple of times. Where was this? Q1 and Q3. And we just had Q1. So yeah, Q2, I mean, if we are technically seeing growth year over year in general, then we can potentially get up to 7 plus on the PE side, which again, may bring up the stock to the high 70s, maybe even potentially the low 80s. Price to sales sitting here at about 0.73. That's actually the highest it's been going back to the tail end of 22, but, still not even, 1 for 1. So that could be viewed as undervalued as well. Price to cash flow, 2.59 times cash flow. That's the highest it's been since this time last year, basically. And then we did see a dip down. So curious to see what happens. But again, overall, in my opinion, the earnings have been pretty strong, and the revenue again beating 7 of the last 8 quarters. So it seems pretty consistent right now in the moment. If they do happen to start coming in light on these earnings reports over the next quarter or two, and they potentially even lower their forecast and their guidance, then obviously you can reevaluate the situation and potentially just consider getting out and trying to slither back in maybe down the road at a more attractive time potentially. Price to book here, 0.86 times book value. We looked at that. It's above 83 right now as of last quarter. Enterprise value, again, not something we look at, but it's the next thing on the list. Enterprise value, basically what another company would be willing to pay for this company. And you can see that the market cap right now a touch over $1 billion. Enterprise value 1.75 billion, which would be a very nice jump from where we currently are here, which would bring this stock technically to like $120 plus a share. So this is why I'm saying in a lot of these numbers, we can potentially start to make the argument that this stock is undervalued and it has been rebounding as it should be, you could say. And, the move is justified, and we can potentially start seeing new highs and continue back up to the 70s and the 80s. The return percentage, technically they are slightly down quarter over quarter, but if you look even here, the return on assets almost 8%, that's higher than it was for the most part overall, minus the slight dip from last quarter, right? So this is what I mean. Technically, we know these numbers can fluctuate quarter over quarter, but if you're generally heading in a better direction year over year, compared to 2 years ago, compared to 3 years ago, right, then obviously the business technically is moving in the right direction. Return on equity sitting here about 15.5%, had a slight dip, but technically that's higher than previous quarters. And same thing with our return on invested capital. Gross margin here had a nice little bump. And we can see we went from 20.1% up to 20.85. We were a little bit higher here a couple of quarters ago. However, before and after that, we were in the high teens. So the fact that they're maintaining that 20+% mark seems like a decent sign, in my opinion. Operating margin as well, very, very slight dip here quarter over quarter, but they're maintaining that 12%. And again, we had some mixed numbers here. We were higher in the higher teens and lower 20s, but we were also significantly lower down here, 4%, 9%. So now we're maintaining 12%. Basically, in my eyes, what I'm seeing here, in my opinion, is stability. That's what this is starting to show me here. This is starting to show me that a lot of these numbers are remaining stable. And again, they're seeing the positive cash flow. They're consistently trying to repay down that debt. They recently got rating upgrades, as you see from Fitch. We'll get into that in a second. And again, share repurchases that they're expecting here throughout 2024. So in my opinion, these are all positives. EBITDA, slight drop here from the high 29s back down to 27%. We were above 30 here for Q1 and Q2 of 23. But we can see that, again, before and after that, we were down 25 in the high teens at times. So we do fluctuate, but the fact that they're kind of at the higher range of those 20s, in my opinion, again, decent sign. The net margin percentage we see did take a hit, but we do have some big, we're coming off these big fluctuations here. Q1, Q4. Last Q1, though, again, their net margin, this is what technically dropped the stock roughly 2% after last earnings, is the fact that this time last year, we had a net margin percentage up here in the high teens, and now we just reported net margin percentage of around 7%. So that obviously upset a lot of people because all we want to see is continued growth and rising profits. So, any slight setback, of course, can pull the stock down. But in my opinion, short-term speed bump here. Debt ratios going down. Inventory turnover climbing up, recently dropping down, possibly on its way back up now. I know they're talking about some potential projects now, basically are going to be up and running soon in the next couple of months. I know they were looking for like the middle, second half of 2024 on a couple of things that they mentioned. So this is why, again, some of these metrics can start rebounding and climbing back up. Asset turnover, how much revenue they're generating off the assets on their balance sheet. We can see we were technically a little bit higher at times, but overall we're trending upward here from where we came from. We don't pay dividends. EPS, 5 beats, 3 misses of the last 8 quarters. And again, the revenue side, 7 beats, 1 miss in the last 8 quarters. Over the years as well, we can see. So we rebounded in 22 basically back to where we were, and now 23 we had a nice jump higher here with the revenue, 146, again expecting 146 billion for 24 and getting above 1.5 billion for 25 and 26. But if 2020 didn't happen, that leads me to believe that these two dips may not have happened. And in 2020, we may have been able to maintain the 1.19. And even if we were flat again for 21, by 22, we may have potentially hit 146. And by 23, who knows, right? If we didn't have the setback, this company could have potentially broken above the 1.5 billion revenue mark. So this is why I'm saying, a lot of companies did have these setbacks. And it did take 2-3 years coming out of those 2020 lockdowns and whatnot to get back to even where we started. And now the actual rebound and the actual recovery can begin to take place. Well, not recovery, I mean, the actual continued growth if we didn't get set back for 2, 3, 4 years, right? I'm sure that made sense, kind of. But Contract drilling up. Completing projects. We can see revenue from, again, this is a Canadian-based drilling company, and we can see Canada drops all the way down from mid-high 400 millions down to the low 200 millions, and then we just start chunking up, coming right out of 2020, 350, 535, north of 700 million for 2023. But again, they said that both rig numbers for Canada and U.S. are potentially going to start increasing over the next couple of quarters. So we may begin to start generating even more revenue than we're currently generating from each segment here. But U.S., you can see we were up to almost 700 million, dropped down to about half that, then to the low 300s, and then we chunked up back to 550, outperforming Canada. And now we're sitting here at about 650 and a third million. So almost in line with the revenue that they're generating from the home country as well. And of course, the company also operates a handful of rigs overseas, internationally. And we can see technically that has dipped down, but we know there's a lot of stuff going on now overseas, but the company's still maintaining that 100+ million mark internationally. Overall, in my opinion, again, I just like it, you know, kind of like that comeback story. And technically, of course, it is up big and has been holding steady over the last couple of years. So technically, of course, we did miss the bottom on this one. But again, sometimes it pays to give these companies some time. And again, we looked at the setback that they had in revenue throughout 2020, 21, 22, right? And now they're basically back in line with where they were. So even though you didn't catch the low of the lows, we may potentially be nearing a time where the stock is potentially about to break out and take that next leg higher and start running maybe into the high 80s, the 90s, maybe trying to get back to that triple digit number of 100+. So we'll see. But as we see here, Precision Drilling upgraded at Fitch, upgraded Precision Drilling long-term issuer default rating to BB minus from B plus. Also, Fitch upgraded the company's senior unsecured ratings to BB minus from B plus and affirmed the senior secured revolver at BB plus. Rating outlook is stable. The upgrade reflects the company's execution on material gross debt reduction, too much coffee, initiatives, improved through the cycle leverage metrics, strong liquidity, manageable maturity profile, and consistently positive free cash flow generation, which supports further debt reduction. Offsetting factors include uncertainty around increases in E&P development spending and rig counts amid weak natural gas prices, the rating agency said. Company shares were last seen down. But for the most part, again, everyone's basically bullish on it. Piper Sandler, again, this was, what's today's date? Yeah, so this was about 10 days ago. Piper Sandler adjusts price target to 101 from 81. I believe that's US dollars, but either way, even the Canadian price targets that they show here in a lot of these articles are, higher than current price. Precision Drilling maintain overweight by Piper Sandler. Precision Drilling maintain at strong buy by Raymond James. Do they give a price target? Yeah, see, price target raised to 136 Canadian dollars from 132. So honestly, I don't have the conversion rate offhand, but I do know that the Canadian dollar is worth a little bit more, right, on the exchange rate. So 136 Canadian is what, 148, 150 American US dollars. But either way, it's higher, right? Okay, we reported results here. Let's see. Revenue fell. Yep, technically. Net income only 36.5 mil. Earnings estimate dropped. We have 12 strong buy, 1 giving it a hold. No sells, no strong sells. Average rating buy. Medium price target 128 Canadian. And yeah, we're 2 for 2. Yeah, see, 62% drop in Q1 net earnings, which we looked at before. Sector perform rating reiterated by National Bank of Canada. Reiterated its sector perform rating. Again, this is after the stock went down and we saw profits drop. They came out and reiterated sector perform rating, $135 price target. Okay, we're reading. The company said it remains on track to reduce debt by between $150 million and $200 million and return between 25 and 35% of free cash flow to shareholders in 2024. Precision expects customer demand to increase with the startup of the Trans Mountain Pipeline expansion and increased regulatory spending requirements for well abandonments. The company continues to look for opportunities to lower costs. According to National, Precision, quote, continues to prove out the stability of its consolidated earnings through the installation of its diversification. National Bank said that the quality of the company's earnings should continue to support free cash generation in support of its augmented returns through buybacks. Meh. I just want to run through these articles, just make sure we try to get as many catalysts and little tidbits of information as we can so that we can potentially see where we can go moving forward. Okay. Earning fall, lower activity in the U.S. We're reading. Revenue dropped, but came ahead of what analysts expected. Despite the fall in profit, right? Still committed. Yep, pay back debt. Allocating free cash flow, share buyback, share repurchases in the first quarter amounted to 10 million Canadian. Around since 1951. 73 rigs in Canada, 38 for the U.S. Increase of 4 in Canada, drop of 22 here in the U.S. But again, we're 2024. This is an election year, and we can potentially have a completely different landscape rolling into 2025. So only time will tell. International, 8 active drilling rigs. No, but there were also just many other upgrades here that I wanted to look at. Maintained that outperformed by CIBC World Markets. Price target raised. Again, this was only a month ago. And I understand the company reported earnings, but reported earnings since these price target changes and whatnot. But technically, they're even recently getting upgrades as well. So it seems as though everyone's still pretty bullish on it. But Precision Drilling price target raised to 125 Canadian from 115. Q1 earnings expected to decline. Price target raised 126 Canadian dollars from 125 ATB Capital. S&P revises outlook on Precision Drilling to positive from stable on ongoing debt reduction. Right? So this is kind of like the opposite of what we saw with the ratings downgrades from the agencies for our U.S. government here. You're seeing, obviously, the inverse here coming into Precision Drilling. They're getting their debt in line, cash flow more and more positive. Positive from stable and affirmed B+ issuer credit rating. Also, the rating agency affirmed B+ issue level rating on the company's senior unsecured notes, while revising the recovery rating to 3 from 4. Positive outlook reflects the rating agency's view that Precision will continue to repay debt and generate improved credit measures over the next 12 months, with adjusted funds from operations to debt averaging close to 60% and adjusted debt to EBITDA of about 1.5 times. The company reduced its absolute debt by close to $800 million over the past 5 years. S&P is expecting a further debt reduction from free cash flows through 2025. The agency believes that the lower gross debt levels will allow the company to sustain improved credit measures through the commodity cycle. Moody's upgrades Precision Drilling outlook, changed from stable to positive. This was February 27th. Again, all of this taking place within the last couple of months. BA3 from B1. Profitability default rating, BA3 PD from B1 PD. Company's speculative grade liquidity rating is unchanged. The rating agency changed the outlook to stable from positive. Quote, the upgrade reflects ongoing debt reduction, supporting low leverage and resiliency through industry cycles, Moody's analyst says. right? We have to go all the way back here to see recent price target cuts, but again, seems like it's only Piper Sandler. Still maintaining an overweight rating, but lowering that price target from 100 down to 81. Maintained outperform at RBC following Q4 results. Price target kept at 122 Canadian. Precision Drilling kept at buy at Stifel. Price target trimmed to 115. That's what I mean. Even trimming their price targets, everyone's still looking for like 15-20% minimum, it seems like, growth here on the lower end of these price target ranges. Precision Drilling maintained sector outperform. National Bank, price target kept, 135. But yeah, there's not too much. Profit Jumps provides guidance. I just want to see, did we miss anything? Yep, lowering debt. The company also plans intends to increase its long-term debt reduction target to $600 million between 22 and 26 and continue to move direct shareholder capital returns towards 50% of cash flow. Plans to continue delivering operational excellence in drilling, service rig operations. Liquefied natural gas. Precision Drilling still expects North American LNG export capacity to increase over the next 3 years due to projects that are currently under construction, right? That's what I was talking about before. As a result, the company is expecting a sustained period of elevated natural gas drilling activity in both the U.S. and Canada. Further, the company said Trans Mountain oil pipeline expansion is expected to be commissioned late in the first half of 2024, right? That's what I'm saying. We have this pipeline now potentially about to be commissioned here in the next couple of months. Increase in Canada's capacity for crude oil by almost 600,000 barrels per day. Coastal GasLink pipeline achieved mechanical completion in late 23 and will deliver gas to LNG Canada, which is expected to launch startup activities in 2024. The 2024 capital budget is $195 million, which is lower than the $227 million invested in 2023, the company said. So overall, in my opinion, again, we're talking about debt reduction. Overall, in my opinion, it really does seem like a lot of these fundamentals are heading in the right direction. And if this company, right now in the moment, in my opinion, I think the stock is undervalued. And we can easily, I think we can easily see, I want to say 30 to 50% longer term. Which of course would bring us, high 90s, potentially $100+ plus, 50% from here, roughly 36 points. That would be, $108 a share? 50% move from here. But again, that would bring the market cap to about $1.5 billion. So, it's technically not really a crazy move. And while you can make the argument, hey, listen, they still have, several hundred million debt on hand, I understand that, but at the same time, they have not only committed already to restructuring the debt, but they also, again, got all of these nice increased credit ratings, and they're still saying that it's their focus to repay that debt, bring that debt down, and again, they're talking about share repurchases, right? So every time they repurchase shares, technically the share price should go up. So that's what I mean. If they continue doing what they're doing, I actually think $100+ plus a share may be conservative. And some of those other analysts that are looking for 128 Canadian, 138 Canadian, we're talking 130 and change, 140, potentially $150 a share, US dollars, which of course would be, 100% move potentially from where we are right now. So definitely one to keep an eye on here, PDS. And again, if this does happen to pull back, this is my support trend line here. This is going from the low December 20th, 21 connecting, running into those lows right there. May 30th, it looks like, 2023, coming across. That was the last time we touched that bottom. But if we do happen to pull all the way back here to the bottom, you can see it's like 53.5. So we can potentially have these swings because, right, we have been stepping up and down widely inside of this triangle. So, of course, you can potentially get this for a little bit of a cheaper price. But overall, in my opinion, it might not be the worst type of financial situation to start piecing your way in here, in my opinion. Stock charts very quickly. RSI basically middle of the road here, 54.5 on the daily. Company just bounced nicely off of the mid Bollinger Band here for the last couple of days, and we can see, look at this moving average as well, a 50-day. We climbed up here into the 60s, pulled back to about 55, 56 it looks like, and now we've been climbing up with the stock sitting here above 69.30 right now. Bottom Bollinger Band 66.79. Could always come back and retest this 200-day moving average, but the stock has basically jumped up and stayed above that moving average, both the moving average actually, since the first half of January, it looks like. So it seems to be remaining strong throughout 2024. MACD is pulling back and heading down. That's why I'm saying we can potentially pull back a couple of bucks, maybe retest the 50-day moving average here, or maybe kind of pull back to the high 60s here, meet up with this bottom Bollinger Band here as it's coming up to 67, 68. Let's check the weekly real quick. Weekly RSI 60.75. We've been on the up and up again. Basically, right after we're looking at end of January, we jumped up here on the weekly and we've stayed above the 50-day moving average. Look at this here, just on the up and up. We saw this rebound. Now we're in kind of like this symmetrical triangle range here. MACD seems to be slowly climbing. RSI riding high. So again, we can rally up to potentially, 75, 76 a share, get near that top Bollinger Band, but of course we can start to pull back, and we can pull back to like the high 60s, and then we can bounce from there and go back up, right? So we know that we're going to have always some short-term volatility to deal with, but in the long term, in my opinion, I personally do see growth here with PDS. Again, Canadian drilling company. But I want to show the pivot points also, because one of them was basically right where we were looking at. So next resistance level here on the weekly is 80.30. Yeah, it's technically, I mean, if it immediately goes up in the next week or two, it's technically not even 80.30. We're looking at like 79.70. But on the daily, we're looking at 76.87, and the second level resistance, as you see, 83.55, which again, if we do take until like next quarter to potentially hit this top trend line, as you see, we're looking at about like 83, 83.20. So that's why going into this next earnings, which is scheduled for July 25th, we can potentially see this stock like step up and get into this low 80 range and potentially test that second level resistance of 83.55. And of course, that would bring us to this top. Again, this is the all-time top resistance trend line here. So if we happen to get up and test this trend line, and then these earnings come out and this company beats and announces again, oh yeah, by the way, we're repaying nice debt still, and we're scheduling a buyback, and we may potentially break above this top resistance trend line just inside of the next couple of months, and we may potentially be off to the races. Well, no, let's not look at it like that, but we may potentially be off to the races right here. I mean, even if we go back to the previous tops here, as you see, back in 2017, it looks like we come back even right there at the top of not even at the top of the candle, we come back to the top of the body of this one right there. You can see, look, we're looking at like $113 a share. That's why I'm saying, in my opinion, if you're bullish on this one and you're looking for like an easy 30, 40, 50%, in my eyes, I see it. I see it. And that's pretty much it. So I'm going to end it there. But yeah, shout out. Honestly, I'm sorry I don't have on the board who actually asked to look at it. But that was the next one on the board. And I told you guys I worked down the board, and I try to make everyone happy with all the stocks you want us to look at together. And any updates you guys ask for, I try to get to everything when I can. Sometimes I'm delayed, but it is what it is. But that was the next one on the board, so I'm a man of my word. We took a look. PDS, Precision Drilling Corporation, on the New York Stock Exchange. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, right? And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Enjoy your weekend, guys.